Hello, hello, hello. Today is January 31st, so it's time for our monthly recap on the Roth IRA portfolio. Today, we can see the value is still changing. We're still in after hours on Friday. However, we're at about $16,960, which is a big up from last month, which we will see, but it's not the all-time high during the month. So let's get into some of these charts, kind of see what I'm talking about. So intraday, we saw a high of 17,230. So crossing that $17,000 mark almost like consistently now. Before we touched it very briefly and then kind of just went right below. But now we're kind of hovering around it, getting more acclimated with all these deposits we're making. So let's look at a week. Over the week, we're down 1.26%. If we're looking at the beginning of today, we were actually up, just a down day. And over the course of the month, we're up 1.5%, which would be about a month exactly from my last video. So that's $253 worth of market gain, 1.52% in 1 month, which is an incredible rate. I mean, if you're going to annualize it, that's more than I could ask for annually in the stock market. Looking at 3 months here, up 7.3%, which is $1,156. Year to date, which is a really nice view that we have now that we can actually see because we've started the full year and now we're on Robinhood at the beginning of the calendar year. We're up $373.81 or 2.25%. So we can see these highs and lows that we've been kind of experimenting with. A lot of volatility going on in the stock market recently. We can see even year to date we were down 2%. Well, we've fought our way back up to plus 2.3%. But we had a high of, 4% over here. So it's been kind of all over the place, just trying to write it out. I mean, fortunately, we seem to get some buys at the lower points, so that's nice to see. 1 year, which this is where it kind of just gets inaccurate because we transferred over in May, but since we transferred over to Robinhood, we're up 16%, which is $2,300. We'll get more into the specifics of the time frames, but I mean, that alone, if that was a return in just 1 year, that'd be great, but in reality, it's actually much higher. Let's go down, look at our contributions for 2024. Now, if you don't know, and if you have a Roth IRA, you can still make contributions to 2024 for the end of the tax year, which I recommend doing. I'm specifically doing that, and I've been doing it every year because starting after I graduate, so this year, I'm going to be maxing out my Roth IRA. So this is basically giving me the opportunity to get a couple hundred extra dollars in the account than I would be able to get to. So, I mean, if you have the opportunity, I would say just keep investing as long as you can in the past year, because you never know when your income's going to change, and then you're going to be able to put all the rest of the money in that next year and just get more money in your account, which is what you want to do in a Roth IRA. You're limited on how much you put in the account. If you keep backpedaling a year, you're going to kind of run into the opportunity of being able to provide more for yourself. So beyond just the account values, let's look at some stocks here. I did have a little sneak peek of one typed up there. But first, I want to talk about NVDA. I did just make a video before this highlighting it much more in depth, but the point that I'm trying to get at is they had a huge drop. So we can see at the beginning of last month they were trading at 137, but they hit a high of 151, which I talked about last month. It seemed like they're kind of losing steam, and it just seemed like I was instantly wrong. Up 10% for the month, okay. But then we can see on January 24th they were at $142.60. Then almost immediately they crashed down to $123, which in that time frame is just a incredible drop. It's like 15% during that. I mean, we can even see it sort of approaching 16, 17% down from that point. And this was because of the DeepSeek model that came out in China, which basically do it for much cheaper. It's faster, more accurate, which would require a lot of the revenue streams for NVIDIA to drop as a result. And that's kind of why the valuation dropped based on the future cash flow model. So we've seen it kind of rebound a little bit. The next 2 days it did, and it seemed like it was coming all back, and then, well, you look, it's just kind of making its way back down. So if we look at some of the larger chart, we might get a little more insight here. Look over a year, up 100%. Well, that's nothing to fret about, but let's look at the 5 year, and we can kind of see where this pattern starts. So we had that exponential parabolic growth that everyone talks about when it comes to NVIDIA, and people couldn't stop talking about. But we see since 2020, well, since the beginning of 2024, not much progress has been made. Well, since June of 2024, it was at $132. Today, it's trading at, let's see, $120. So you can see it's kind of peaked out for a while. Last time it was at this point was June 7th, which was about 7 months ago. So although it did still experience growth after this point and peaking at about $147 here. You can see that a lot of that growth has stalled. Look at the last 3 months are down 12.5%. Last 1 month down 12.3%. Week you're down 18%, and over today you're down 3.73%. So the bull case on NVIDIA is starting to dry up. I think people are realizing it's at about fair market value, which is the kind of diagnosis I made a couple videos ago, and I did go into their cash flows. That was 3 or 4 videos ago. And I said, hey, 120 seems to be kind of where that valuation is actually sitting at and is fair value. And I don't know if that was correct necessarily because the value dropped after cash flows were affected, but it seems that it's kind of hovering around that 120 point. And it's going to be interesting to see how it moves in this next month. But for now, we're kind of just stuck at this point and wondering what the future of NVIDIA is going to be. Okay, let's look at Apple here. Apple is an interesting case because over the month, you can see they're down 4.7%, but they were hit heavily earlier in the month, and they started rebounding around the time of the DeepSeek, which is very interesting. You thought that Apple, someone that's put a lot of money into their expenditures for AI, wouldn't get a return on their investment, but it seems that people are bullish on the case of Apple, and it's actually been coming back a little bit. So although the 1 month looks a little tough, it came back from a really low spot, and it's interesting because not a lot of people are bullish on Apple right now. We've seen their revenues kind of stick and not really gaining traction where they need to. China market's not looking the best for them, so it's going to be interesting to see over the next month how they're moving. But for now, I wanted to point out that they actually had like a comparatively, especially compared to some of these other AI companies that got hit, a pretty decent month. If you want to talk about something not a decent month but a great month, look at Netflix. They had earnings, and although earnings were pretty on par with what was expected by the market, we can scroll down and see that here. You see earnings, very slight beat, nothing to brag about, but the stock still jumped. I think it was about 10% intraday. And the reason for that is that they posted a large amount of subscribers. I'm not sure how many millions off the top of my head, but it was much larger than what was going to be expected. So although they didn't get that revenue right now for this quarter, it seems like they have a really constant stream of future subscription revenue, and that's obviously just going to raise the valuation today. So Netflix seems like they won the streaming wars, and the stock market is acting accordingly. Let's look at Tesla. Tesla was interesting for this month too. So you can see they're up for the month, but they were up at 13% and then got hit incredibly around this time of the DeepSeek. And they did just post earnings, and yeah, it was a miss. So I remember their sales of their Teslas were down, revenues were just a miss, profit overall was a miss, and you can see Morningstar saying fair value for this company is $250 and it's valued at $400. Tesla, I wouldn't want to touch with a 10-foot pole, and people are really amped on just pumping the price up more and more, especially since the election. So I don't know. I mean, you look at these charts, it's very confusing to look at. You got an incredible jump in price recently, but I just don't think it's warranted, quite frankly. They don't have the revenue. They make a lot of empty promises, and although I love the company, I love what they manufacture, I think it's overvalued in my opinion. And yeah, no, it feels almost like a little bit of a lottery ticket when you buy it, so just stay away from that. Microsoft, you can see that they were up over the month. They were up 4.5%, which was great. Then they missed earnings and dropped about 6% in the day. I know Microsoft as well as heavy investors in AI as well. Well, it seems like they beat EPS, so they must have missed on one of their other lines. I thought it was missing on EPS, but it seems not. I know DeepSeek affected them. Again, you can see around that same time how their valuation dropped, but then just like NVIDIA, it had a really big pullback rally to it. And then earnings came out, and although they beat earnings, it looks like, it seems like I missed something there, but they missed on one aspect or another. But I do see the overall bearish case coming about Microsoft, especially with the DeepSeek. What I've been saying this whole time is that these companies are pouring billions of dollars into AI expenditures up front. And yeah, they're going to have to purchase recurring revenue, well, recurring expenses going into the future, which is great for NVIDIA. But it's not going to be the same amount that they did that upfront purchase of, basically. And now people are saying maybe they didn't have to purchase that much, so will the return on their investment be what we thought it would be? That's up in the air completely. People have concerns about the legitimacy of the DeepSeek report, if it's true at all, the cost. what it took to compute all that. So I think a lot of people are getting a little speculative when it comes to the AI. Some people think, hey, they overspent. Some people think revenues aren't going to generate all this, and some people are, incredibly bullish on it and think revenues will generate out of it, which is totally fair. I think some companies have done that. But I don't know. A lot of these overall tech companies that have been valued incredibly, and we can see that Meta. I think they're just kind of hitting high valuations, especially given the current landscape. And Meta's up 15%. So even with the whole DeepSeek thing, their platform was just rallying. And I know that one reason was because DeepSeek was trained off of their Llama model. So I guess people like to see that. But it's still up 15% for a month. That one didn't quite make sense to me, but maybe it's just because I'm not a holder. One last thing before we go to some of our other charts. We can see that our Google position has been increasingly growing. Right now we're at like a quarter of a share, which is nice to see. And we're up a good amount. Total return of 5.3%, which is great considering the fact that I've only been slowly buying into this position. If we look at the last month, we're up 6.59%. The stock is at least. And I've been buying over that period of time. I started buying at the end of December, and throughout January I've been buying, and I plan on continue buying into this. Very bullish on the company. Maybe I'll make a bull case video on that another time, but for now we're just going to keep buying in. Hopefully keep that average cost low. We've been buying at some low points and getting back at it, so that feels great. But only makes up 0.3% of our portfolio, so nothing to brag home about, and we'll keep working on that position. Now, since we're at the beginning of the new year, we got through a month of it, and I'll be turning 22 soon. I want to talk about some of my other accounts and where I'm at in life. So we can go on our Fidelity here, and I'm going to blur out this left section. Don't want you guys to know where I work at. But this is my Fidelity account through work. And we can see I had it at about $1,031. And then I got a salary compensation and a match on my deposits. And that was about $1,500. So that brings us up to $2,606. And I've been steadily depositing 6% out of all of my paychecks. I'm at $2,829 right now. You can see a little better breakdown of this if we look at this report. So beginning balance is 0. I just started working at this place, and I plan on continuing with it. And I think coming next year, we're going to see this value just increase greatly because I do get a percentage of my salary throughout the time I work there. So next year, we're going to see a great increase in values. But you can see that I deposited $1,232 about into this account, and my employee contribution was $1,476. And we had a market gain of $120, which got us all the way up to $2,829. And we can see additionally that $6.83 of that was dividend income. So if we look at our asset allocation, Fidelity needs to work on their website. It looks like crap, but 100% stock. And that's because I'm in the FID 500 index, which is Fidelity's index for the S&P 500, ticker FXAIX, which is a mutual fund, so you can only buy it through Fidelity. But we got up to, let's see, a little over 13 shares, it looks like, from when I ran this report, which was yesterday. Started at 0 shares, obviously. Got our average price here, the price that we're trading at, so a lot of great stuff to see there. My 401k is something that has brought about a great amount of value to me in a short time, something I want to keep contributing at, and something don't have shown on this page is I'm making Roth contributions to it. So when I pull that money out, it's actually going to be tax-free gain, and I'm taxed on it out of my paychecks. So I'm basically doubling down on Roth accounts. I got my Roth IRA, and I get my Roth 401k contributions in. But anytime they do a match, those are traditional 401k contributions as per the law. So I'm not just in Roth exposure. Unfortunately, I am forced into some traditional exposure in my 401k, but nonetheless, I can't complain. I get some sort of tax advantage both way. Roth is better, but even when it's traditional, it's way better than investing in standard brokerage. Now let's look at our investing account charts for the month. And you'll see a lot has changed here. I added a whole nother line of contributions. So before, I only had contributions on here for a quarter, well, for every single quarter, and I didn't have some sort of line chart. I added that in. That's in the red. You can see how much money we put into this account. The green is the balance of the account. And interesting enough, the blue is the balance of SPY. And this is the balance as if I were to invest every single buy into SPY at the time I did at market open. So that's a lot to take in. Basically, I tracked down all of my buys and said, hey, what will my value be if I bought it on the day that I did the buy at market open, because that's when I do my buys. And then I also incorporated dividends that were paid out during that time, did a running share cost, had some slight expense ratios in SPY. I think it's 0.09%. So it took a lot of work, a lot of hours to get up to this point, but now it's something we're going to continually just keep running. Very easy to keep up to maintenance. And with that, I've been able to put a portfolio profit along the date that I've had it. So we can see, and I've talked about this multiple times, that for the first 2 years, I really didn't see any gain in my portfolio. And that was very depressing to start. I mean, I was very excited about investing, and everyone talked about crazy about investing, like it's going to change your life. And in 2 years, you see nothing. I mean, you see points where you're pretty down in the red for a small portfolio. So that hurt for a while. I mean, being down $400 and you got, 2,000 some in it, yeah, it doesn't necessarily feel good. I kind of went through the last bit of a stock market dip, crash, correction when I was starting off. And I felt the brunt end of it for about 2 years. And then we can see the recent gain that we were able to experience in this portfolio in the last 2 years. So that's been great to see. We can see that we're totally at a profit of 4,948. Now that is the end of last month, so that needs to be slightly updated. But we'll keep going through this, and we can see the difference and the values of our portfolio over time. And then this is compared to if I just bought the SPY. And you're going to see I was down greatly to start in this account, which makes sense because I was in M1 Finance's retirement thing, which had bonds in there and international exposure and all that stuff that I wasn't necessarily interested in being in at this age. So I was down incredibly compared to the S&P. Switched on my trading strategy, just got into the S&P basically. And then more of recently in 2023, I started focusing on being into the NASDAQ, which was able to bring me back an incredible amount. And now that I've done that, I'm pretty high above the S&P. At the end of January, I was 270, but we'll be able to see just now what I'm at now. And we can see here our open positions. I've changed this page around a little bit, nothing too crazy. Got QQQM, VOO, and Google. We have their equities, and these are manually calculated now by the last price of the market. And I just tracked their shares that I have. I just updated this before the video. I have the cost basis, which might need to slightly be updated, but it is relatively similar. But all that being said, I have a portfolio balance at closing the market at $16,964, and I've put in $11,634, which means a profit of $5,329 in total over the whole entire time I've had this portfolio open. And this is something I've been meaning to track more efficiently, and it seems like we're at that point now. So over time, I've got 45.81% return on my money, and that's with me slowly investing over 4 years now, just about. And I mean, I'm pretty happy with that. 45.81% over 4 years with a lump sum investment at the very beginning would be great, but the fact I've got that while continually building my portfolio up day by day, week by week, it feels great. We have our closed positions, nothing new here. I haven't closed anything else out. Only real difference to look on this page is my Google position slowly growing. Now it's at $51.6, so that's great to see. I'm hoping to get up to a full share of Google soon, which is about $200, so we'll keep working at that. I got a continual SPY comparison over by my portfolio balance, and this is ran off of the data I put into 2 pages down, which I'll show you. But from this, we're up $270, which is great to see. Very similar to last month, so no major changes. Now we got our positions over here, which starts to look more interesting now that we're introducing Google into the portfolio, and it's not just 2 slices. QQQM is 62.2%. Want to get that down to about 60%. VOO is 37.5%, and Google is 0.3%. So between these, I still need to get about, 2.2% between the two of these into my portfolio to balance it out how I want it to. And we'll keep working there. But looking at the chart data here, so basically this is what took me ages. I had to load in all of my chart data, all my buys, And then I just made a running share cost. So if you guys were ever curious about this and you kind of wanted the formulas I used, more than happy to share and save you some time because I ran into a lot of issues trying to make this. But overall, this will be very easy to keep up. All I have to do is just add a buy-in whenever I perform one. And you can see down here that I track all that. And I get a running share cost of SPY and then base the final value off the closing price of SPY for that day. So that's a lot to take in there, but all that allows me to look at these three pretty charts and make good analysis off of it. And the last thing I want to check out, because I'm about to turn 22 and there's something I haven't been checking, is my net worth tracker. So very open with everything. I really don't mind sharing finances. I'm a college student that's about to graduate in May, and I've been working very hard to get this number up. And it's very difficult when you're taking out loans and you can only work part-time a lot of the time, but I like to live frugally. I'm very smart with my money, I think. At least I'm very intentional with my money. And we can see my assets and liabilities. Assets minus liabilities, what you own minus what you owe is your net worth. Look at assets, we have three categories: cash equivalents, equities, and miscellaneous assets. Under cash equivalents, we got all my savings and checkings account. So that's the spread between my bank and Robinhood. My savings accounts are $6,893. It has $700 in my checkings account. And this savings account includes my high yield savings. Maybe in the future I'll separate that. But the large majority of that is in my high yield savings, $5,000 of it. My equities, I have my Roth IRA and 401k here. My IRA, we talked about that in the video, $16,990 about. My 401k, we just went over $2,829. And my car, about valued at $5,000. If you're going like a Kelly, Blue Book, find the middle point. And I'm pretty confident with that valuation. If I wanted to sell my car today, I could get that. Maybe I will sell it, get a new car sometime, but it's all paid out. Don't own anything on it, just outright bought it. And student loans, which is my only liability and something I've been working on, is at $4,410. Now this is the highest number this will ever be. I don't have any more loans to take out after this semester. And realistically, look at my cash equivalents, I could pay off my loans right away. But they don't gain any interest until I graduate, so we're kind of letting them just hold on, wait on it, no real rush on it, but I'll continually paying them until I graduate in May. And then whatever the last balance on my loans will be, I'm just going to outright pay it, avoid all my interest. So with that being said, my assets I have are $32,414. My liabilities are $4,410, leaving me at a net worth of slightly above $28,000. Now this is very great for me to see. I like seeing this number because 2 years ago that was about at 10,000. Last year 15,000, maybe like 18,000. So made $10,000 to $13,000 progress in net worth in a single year. A great amount of that comes from my equities, I can admit, but I was paying off my loans during that time, which I didn't track. And my cash equivalents have grown greatly, and my car's completely paid off. So a lot of things that were going on during that time, but I think it all goes to show that I've been trying to get this number up, and it's been working out well for me. So I think we've made some really great strides in this last month. Roth IRA is at a great point, and I mean, even being up the last month, that feels great. So next month, who knows what's going to happen? Who knows if it's going to fly up or crash down? Due for that correction sometime, probably perma bear, but perma bear, just keep buying. So quite frankly, that's how investing works. So thank you for tuning in. Make sure to like, subscribe, share with your friends, ask any questions. More than glad to answer them, and tune in to the next video.